Let's talk a little bit about the Moody's report that's just come out, talking about the overall macros as well as the earnings outlook. Let's connect then with Saranga Ranasinghe, AVP Senior Analyst, Corporate Finance Group at Moody's Investors, to chat a little bit more about the earnings outlook for 2019. Great to have you with us on board. To begin with, you're fairly confident that across the board we will see revenue growth coming in. What is leading to this conviction, and what are the factors that you believe that will lead to this growth? Because with this quarter that's gone by, it's not been all that encouraging for corporate India.
Yes, thank you. Good morning, and thanks for having me. So we expect credit profiles of the rated Indian corporates to improve in 2019, and this is despite some of the external challenges that the corporates are facing. So this is based on our expectation of around 7.3% GDP growth and government spending on infrastructure investments to continue. So we expect leverage to improve, and this is driven by an expectation of earnings increases, and at the same time we expect interest cover or the serviceability of debt to improve as well, driven again by improvements in earnings despite maybe a challenging interest rate environment.
Okay, let's talk specifically about IT, largely on account of the currency movement. That is going to be a key factor for most of the earnings for some of the IT companies. Digital has been a focal point. How have you read into the IT earnings of some of the large cap companies, the kind of commentary that they've given, and what is it that you're expecting now that the rupee has seen a reversal?
Sure. So with the depreciation of the rupee, there is definitely a benefit when it comes to the IT services companies. There will be an improvement in margins, but sometimes the only problem here is the fact that there could be a delay in us seeing these improvements. But at the same time, emerging technologies or the digital technologies have been growing faster than the rest of the IT outsourcing market. But competition is also quite high, and there have been cost pressures as well. So across the board, we've seen decreases in EBITDA margins, but at the same time, the currency and where it is right now should also provide them a benefit going forward. But there might be a little delay in us seeing these improvements.
Okay. Fair enough. That's the view on the IT sector. Let's talk about the core, GDP numbers as well. You believe that GDP growth will support core domestic demand. Take us through what number you have in mind and how you're looking at the overall GDP growth in light of the interest rate environment that you already flagged off, as well as the overall macros.
Sure. So Moody's expectation is that GDP will grow around 7.3% in 2019, and this is driven by domestic demand and other factors supporting this growth, despite the external headwinds we've seen.
All right, we'll let you go on that note. Appreciate you taking the time out and joining in with a heads up on the earnings outlook, sectors, as well as the overall macros. That's the take coming in from Moody's, by and large bullish on earnings as well as the GDP growth, which will be supported by domestic demand.